Bitcoin is one of the most debated assets today. Some call it a bubble, ready to collapse at any moment. Others call it the future of money, a new global financial system in the making. To understand which view is accurate, we need to analyze its history, technology, and adoption patterns. First, what defines a bubble? A financial bubble occurs when prices rise rapidly due to speculation rather than underlying value. Tulip mania in the 1600s and the dot-com bubble in the early 2000s are classic examples. In both cases, asset prices eventually collapsed permanently. Bitcoin does experience dramatic price swings. Its value can rise hundreds of percent in a short period and then drop just as fast. This volatility makes it appear like a bubble, especially to casual observers. Media coverage often amplifies this narrative. However, Bitcoin has survived multiple crashes. Some drops were over 80%. Yet, after each crash, it not only recovered, but reached higher adoption and prices than before. Bubbles do not usually return stronger. Bitcoin's fundamentals differentiate it from bubbles. Its supply is capped at 21 million coins. It is decentralized. No government or bank can print more. Its rules are enforced by code and consensus, providing intrinsic value beyond speculation. Compare Bitcoin to tulips or dot-com stocks. Tulips had no utility. Many dot-com companies had no products or revenue. Bitcoin, however, functions as a global payment network, store of value, and inflation hedge. Money evolves slowly. Gold was volatile before it became a trusted store of value. Bitcoin is early in its monetary life cycle, but has already proven its resilience. Institutional adoption strengthens the argument. ETFs, regulated products, and corporate Bitcoin holdings show serious trust. This is not typical of speculative bubbles, which rarely attract conservative capital. Bitcoin is not risk-free. Short-term volatility and regulatory uncertainty remain challenges. Some altcoins fail entirely, and many investors panic sell. But risk does not equal failure. Bitcoin may appear like a bubble to short-term traders, but for long-term thinkers, it represents a new kind of money. Speculation fades over time. Bitcoin's scarcity, decentralization, and adoption suggest it could be the foundation of a new financial system.